Hey there, curious minds. Welcome to the Deep Dive, where we cut through the noise to find the truly vital intelligence. Today, we're plunging into a high-stakes corner of financial markets. We're focusing on a specific trading strategy and the critical events that unfolded over just one weekend. Our mission is to unpack AlphaCore V3.16. It's a sophisticated rules-based trading protocol, and this system is designed to exploit something known as a Monday gap down. We'll be looking at how it analyzed four major assets: the Grayscale Bitcoin Mini Trust ETF, let's just call it BTC, then the S&P 500 ETF, SPY, Tesla, TSLA, and the CBOE Volatility Index, the VIX, all based on market data from Friday, September 5th, 2025, and some crucial, almost hidden developments over that weekend. Expert, for those maybe new to this, can you quickly define what exactly a Monday gap down is, and why is it such a lucrative target?
Absolutely. Yeah. So a Monday gap down, it happens when a market like the S&P 500 opens significantly lower on Monday morning than where it closed on Friday afternoon. Usually this is because some major news or, events unfold over the weekend, stuff that impacts sentiment while the main markets are shut. AlphaCore it aims to predict and really capitalize on these sudden, often pretty dramatic shifts. It catches a lot of less informed traders, frankly, off guard. It's a really compelling look at how a system tries to gain an information advantage in real time. Sometimes it even clashes directly with the initial market feeling. You'll hear exactly what was on the table, why it mattered, and how this system was poised to react.
Okay, so let's set that scene then. Friday, September 5th. The market bell rings, trading closes, but for AlphaCore, you're saying the real game was just starting. It had this snapshot of our four key assets, and what it saw wasn't just like dry data, it was a brewing storm. Expert, what kind of signals was AlphaCore picking up as that weekend approached? Signals that maybe most traders might have missed.
Exactly. It was a classic market paradox. On the surface, you had this almost celebratory bullish sentiment, right? But AlphaCore, it was already picking up these subtle signals, these whispers of something, well, darker brewing beneath. It was like the market was telling two completely different stories. And the system, its job was to figure out which one was true before Monday morning hit.
All right, let's break it down. Let's start with the Grayscale Bitcoin Mini Trust ETF, BTC. At first glance, it looked incredibly strong, closed at $49.44, up almost 1.7%, robust trading volume, strong technical indicators. We saw phrases like strongly bullish, a convexity breakout signal, and the options data showed unusually low implied volatility, like first percentile rank low, an extremely low put-call ratio of 0.29. That indicates strong bullish sentiment, lots of call volume. Sounds like an open and shut case, right? Bullish outlook. But AlphaCore clearly thought differently. Expert, what did the system see that directly contradicted this initial strong signal? And maybe for those less familiar, what do terms like convexity breakout and that put-call ratio actually mean?
Yeah, this is the critical pivot point, and it's a great example of how surface-level data can be, well, frankly misleading. A convexity breakout, it refers to a rapid acceleration in price movement. It signals a powerful upward trend. Imagine a curve suddenly getting much steeper, right? Indicating a significant price jump is expected. And for the options data, that put-call ratio simply compares the number of put options. Those are financial bets that a stock will fall to call options, which are bets it will rise. So a very low ratio like 0.29 means there are way more bets on the stock going up. It screams bullishness. However, and this is the key, AlphaCore's strategy was predicated on a weekend BTC collapse. For the underlying Bitcoin, not just the ETF, this directly contradicted that initial bullish ETF sentiment. So that sets up this critical tension the system had to resolve. For you, the listener, this is a really powerful illustration. Initial market sentiment or, any readily available data can often be a trap. True advantage comes from looking deeper or having access to information others don't, which is exactly what AlphaCore aims to do with that underlying Bitcoin data.
Fascinating. So the system was already questioning the obvious. Okay, next up, SPY, the S&P 500 ETF. It closed slightly down Friday at $647.24. Now, daily order flow was positive, and it traded above key moving averages. But the after-hours trading told a different story. It dipped to $645.96. What's the significance of that specific after-hours movement?
Well, that after-hours dip is crucial because it already moved SPY into AlphaCore's anticipated gap-down range for Monday, even before the weekend really began. It's like a sneak preview of what was potentially coming. The options market for SPY also showed low implied volatility, 14.99%. That's the 18th percentile. Now, implied volatility, that's the market's expectation of how much an asset's price will move in the future. Low implied volatility suggested, a period of consolidation. But underneath, there was this underlying cautious sentiment. Puts those bets on falling prices were favored at strikes below the closing price. So, yeah, beneath the calm surface, there was already a subtle lean towards caution.
Okay, moving to Tesla. TSLA. It had a pretty significant rally, closing up 3.64% at $302.84. Largely driven by news, right? Elon Musk's proposed compensation plan. Technically, it looked overwhelmingly bullish. There was something called a MACD bullish crossover and other strong signals. Yet it also saw that slight after-hours pullback down to $349.38. Expert, how could a stock with such seemingly positive news and technicals still be a candidate for a gap-down strategy? And maybe quickly, what's a MACD bullish crossover?
Yeah, it's a great question, and it highlights how Alpha Core looks beyond just the headlines. A MACD bullish crossover, it's a common technical signal, generated by the moving average convergence divergence indicator, the MACD. Basically, it happens when a short-term moving average crosses above a longer-term one, often indicates strong upward momentum. So yes, TSLA looked incredibly strong on the surface, but despite that rally, TSLA's valuation was flagged as very high, a PE ratio of over 200, 203.34 to be exact. And it faced this trend of declining earnings per share and revenue. So this divergence alert in after hours hinted that even strong individual stocks, buoyed by specific news, could still be susceptible to broader market shifts. It's a reminder, really. Even the most celebrated companies aren't immune to underlying economic realities or systemic market pressures.
Right, so a strong narrative battling some less visible underlying concerns. Okay, finally, a VIX, the fear index. It closed lower Friday, 15.1 indicating a calm market, right? But the options market painted a dramatically different picture. It showed extremely bullish sentiment for VIX. With high call volume, it strikes way out there, like $35, $60, even $110. How can the VIX itself be calm, yet options traders are betting on extreme fear?
This is where the market's forward-looking nature becomes incredibly clear. If VIX sentiment is bullish, meaning traders are buying VIX call options, bets that volatility will increase forward. It means they are betting on increased volatility, which typically implies a bearish outlook for the broader market for SPY. The current low VIX reading, misleading. Traders were actively preparing for a storm. There was even an 81.74% calculated chance of VIX being above 16.70 by September 10th. The system identified that specific level as a key trigger for a hedge. This was the quiet before a potential storm, and you could literally see the market pricing it in. It's a powerful lesson. Sometimes the true sentiment isn't in today's price, but in where sophisticated traders are placing their bets for tomorrow.
Okay, so with those intricate, often contradictory Friday signals in hand, let's unpack this Alpha Core v3.16 protocol itself. What's its core objective, and how does it actually plan to capitalize on what it calls the weekend edge?
Well, the primary objective is nothing less than the systematic exploitation of a Monday gap down. Simple as that, in theory. The weekend edge comes from what it calls information asymmetry. This means Alpha Core plans to leverage over 40 hours of Bitcoin BTC movement data that traditional traders simply don't have access to until Monday morning when their markets open. While main markets are closed, you see, Bitcoin trades 247. That continuous data flow for Bitcoin gives the system a critical information lead, an edge that other traders just lack. And this advantage, it's quantified with an expected profit multiple of 3 to 5x compared to what it calls uninformed traders.
An expected profit multiple of 3 to 5x. That sounds incredibly lucrative, but expert in a market as, well, notoriously volatile as Bitcoin, couldn't relying on a weekend edge also expose the system to truly unpredictable events? Black swans, maybe? How does Alpha Core account for those, unknown unknowns?
That's a crucial point, absolutely. And it's where the system's robust design really comes into play. Alpha Core isn't just like taking a wild gamble, it's meticulously monitoring. It uses a unified weekend monitoring dashboard, covers BTC, SPY, VIX, and TSLA, along with a strict weekend checkpoint schedule. This involves monitoring BTC levels every 4 to 6 hours, an overnight assessment, a pre-futures check, and then confirming the whole thesis when futures open on Sunday evening. The system even assigns precise probability weights to its anticipated outcomes, like a 70% chance of BTC falling below $109,480 by Sunday night, an 80% chance of an SPY gap to 644, 645, a 75% chance of VIX opening above 16. So this structured probabilistic approach is its defense against the truly unpredictable. It builds in scenarios and probabilities to manage risk rather than just, hoping for the best.
Okay, so Alpha Core is clearly designed to be highly adaptive, not just reactive. So what happened over that weekend, particularly for Bitcoin, given its conflicting Friday sentiment, and for the VIX, which was already hinting at a storm?
Right, this is where the veto logic and the trap detection protocol for BTC really shine. Despite the BTC ETF's bullish convexity breakout signal on Friday, subsequent analysis of the underlying Bitcoin's movement over the weekend proved that bullish signal to be a false signal, a momentum trap. A momentum trap basically is when a seemingly strong trend reverses sharply, catching traders completely off guard. The system's veto logic essentially said, hold on, the deeper data contradicts the initial excitement. It confirmed its bearish contingency for BTC, preventing a long position. Remember, the BTC ETF was already trading at $49.15 in after hours on Friday, below its key moving averages. That reinforced the bearish outlook. The BTC gatekeeper, as the system called it, remained locked. It highlights a fundamental lesson, really. Always question the most obvious signals, especially if you have deeper, more consistent data available.
So the system successfully identified and, crucially, avoided a trap.
Okay.
And the VIX, which was hinting at that storm. How did that play out over the weekend?
Oh, the VIX truly exploded just as the options market predicted. Out-of-the-money VIX call options for the October 8th a.m. expiration, they saw incredible surges in value, like the XW16 call. It went from 1 cent, $0.01 to $3.62. That's a plus 31,800% gain today, quote unquote, from the system notes.
31,000%? Wow.
Yeah. That's the kind of number that can make even the most stoic trader's heart pound. It really shows how quickly the tides can turn, doesn't it?
Absolutely. Calm to chaos in a single weekend.
And this was accompanied by an extremely high implied volatility of 197.88%. This isn't just a probability anymore. The market was, quote, violently pricing in an imminent and significant volatility spike. That gave Alpha Core a clear green light for an aggressive posture come Monday morning.
Interestingly, though, amidst all this drama with VIX and Bitcoin, the broader market breadth, the advanced decline line, the AD line, it was still trending higher, breaking out to new highs, suggesting a healthy bull market overall. How do we reconcile a system betting heavily on a gap down with that broader market strength? Seems contradictory.
That's an astute observation, yeah. The rising AD line did indicate broad-based participation, meaning more stocks were advancing than declining overall, which is generally a healthy sign for a bull market. You're right. This contrasting backdrop is crucial. It highlights that Alpha Core's strategy was targeting a short-term divergence, a specific dislocation, not a collapse of the entire bull market. It was looking to exploit specific market mechanics driven by the weekend's hidden information. It wasn't betting against the entire tide. It's about finding those surgical opportunities within a larger trend. It's a subtle but really important distinction for any deep dive into market dynamics like this.
Okay, that makes sense. So with the thesis confirmed by the weekend data, the VIX spike, the BTC veto, what was the precise execution plan for Monday morning at the market open? What are the exact moves Alpha Core was programmed to make?
The system has a very clear, refined position entry sequencing. It's designed to maximize impact and timing. First, if VIX is above 16 at the open, VIX calls first, because it's the fastest mover and the leading indicator of that volatility spike. Then, SPY puts second on confirmation of the gap down. This is the main position targeting the broader market downturn. Third, TSLA puts third. But, and this is important only if it's correlating with the broader market downturn, acting as an amplifier. Otherwise, the system is instructed to remain neutral on Tesla. Don't force it if it's not moving with the market. And finally, bounce calls last, between 10:00 and 10:30 a.m., purely as a tactical-only position, aiming to capture a potential short-term rebound after the initial Monday morning sell-off.
That's incredibly precise sequencing. But with such an aggressive, detailed strategy, how does Alpha Core protect itself? What are its critical safeguards if the market doesn't perform exactly as anticipated? What are the kill switches here?
That's absolutely vital. Rigid risk discipline, quote, must be honored without exception. That's drilled into the protocol. It includes critical kill switch scenarios to manage adverse movements. $147, and the VIX drops below 15.5 simultaneously. The command is immediate: exit all positions, no hesitation, cut the losses, reassess. There's also a graduated exit strategy for taking profits. Like for the main SPO puts position, exit 25% of the position at plus 50% profit, exit 50% at plus 100%, 75% at plus 150%, and then trail a stop on the remainder if it reaches plus 200% gains. This protects capital, ensures disciplined profit realization, and crucially prevents greed from holding on to winning positions for too long, letting them reverse. It's about being prepared for both success and, well, failure, or at least things not going exactly to plan.
Makes sense. Okay, beyond all the data, the algorithms, the sequencing, the system recognizes a crucial, maybe unpredictable element, the human operator. It actually outlines psychological preparation protocols. Expert, what emotions does the system expect on such a high-stakes Monday morning, and how does it try to keep the human operator, in line?
Yeah, this is where it gets incredibly relatable. For anyone making decisions under pressure, really, not just traders, the system anticipates a very specific emotional sequence Monday. First, an adrenaline spike at gap open right at 9:30 a.m. predictable. Then FOMO to add more size, that fear of missing out kicks in maybe around 9:35 a.m., wanting to pile in more. Then potentially fear if position goes against you around 9:45 a.m., that moment of doubt. Then greed as profits accumulate maybe by 10:00 a.m., wanting even more. And finally, just exhaustion from intensity by 10:30 a.m. It's a psychological gauntlet compressed into just 1 hour.
Wow, that's an incredibly detailed breakdown of the emotional roller coaster traders face. But, expert, how does simply knowing this sequence help an operator actually counter it? I mean, it feels like that's easier said than done when real money is flying around.
You're absolutely right. Simply knowing isn't enough. It requires unwavering discipline. That's the hard part. So to counter these powerful emotions, the protocol provides specific discipline mantras. Things like, the system is the system, targets are targets, size is size, rules are rules, and importantly, tomorrow is another day. These aren't just, empty phrases. They're designed to be repeated, internalized, emphasizing that sticking to the plan, not your gut feeling or emotion, is the critical success factor. This, the system states, differentiates the prepared operator from uninformed traders who might just scramble or pray when faced with that kind of market volatility. The operator's three critical jobs are deceptively simple: monitor, document, execute. It's about becoming an extension of the system itself, really, removing personal bias from the equation as much as humanly possible.
So we've gone on quite the deep dive today, from those nuanced closing signals on Friday, where initial sentiment really clashed with deeper analysis, to the critical confirmations over the weekend that leveraged unique information, that weekend edge, and finally the meticulous rules-based plan for Monday's market open. AlphaCore V3.1 presents a really compelling picture of systematic market exploitation.
Yeah, what we've explored isn't just about predicting market movements, is it? It's really about how a sophisticated system identifies and systematically leverages information asymmetry, that crucial weekend edge in Bitcoin movements specifically, how it uses that edge to execute a disciplined, rules-based strategy, all while trying to manage the inherent human emotions that inevitably come with high-stakes decision-making. It's quite a masterclass in turning hidden data into actionable strategy.
So, what does this all mean for you listening? Whether you're navigating financial markets yourself, making strategic decisions in business, or just trying to cut through a sea of information in your own field, consider this. How much of what we perceive as just chance or luck in complex systems is actually the result of someone else's disciplined, systematic exploitation of information we simply don't have, or maybe don't process as effectively? That's definitely a thought to chew on, the hidden power of information advantage and the sheer discipline it takes to actually use it effectively. Thank you for joining us on The Deep Dive. Until next time, keep learning, keep questioning, and stay well informed.